It's time for the big three. We've got 3 stocks and 3 charts. Rick Ducat will take us through the charts today, and here to take us through the trades is Jessica Inskip, the Director of Investor Research at stockbrokers.com. Great to have you both with us. Jessica, lovely to have you as always. Would love to start the same as we usually do with just a big picture thought on market performance this week.
Yeah, absolutely. I think the markets are actually looking rather constructive. We have some good earnings thus far. And even though the lack of economic data that we have, we're still in this environment where we are expecting rate cuts into an accelerating economy. And we don't want anything that would disrupt that narrative. Certainly something that we saw last week that could be of concern. But it looks like markets are shaking that off. The big thing that I'm watching right now, aside from earnings, is just where we are in the S&P 500 equal weight to make sure that we maintain key support levels, which is the previous high. So that is still being maintained. That's a good sign for me. If something breaks down there, then of course I'll be cause of concern. But as of right now, markets are looking rather healthy. It's still broad from an earnings perspective and that technical view utilizing the S&P 500 equal weight.
All right, so with that, walk us through your first pick today, PG&E.
Yeah, absolutely. So this came from my technical scan. I've got multiple scans I run weekly. This one is looking for a crossover of the 13 weekly moving average and the 26 weekly moving average. The reason why I use that, 13 weeks represents 1 quarter, 26 is 2. So I'm looking for prices increasing quarter over quarter. So this is where this stemmed from. They are digging deeper, transforming from a post-bankruptcy recovery that happened around 2020 into more high-quality growth utility that's fueled by California's clean energy mandates and a favorable rate structure. That's extremely important. So their post-bankruptcy transformation, that was from around July 2020, that restructured their operations, settled some liabilities, maintained some shareholder control, and then from there, they've got this investment outlook where they're aggressively utilizing energy and environmental mandates, and that's around 13 billion annually, which is going to support 9% in annual earnings growth. So I like this from the technical view. I like the regulatory advantage that's there because of the constructive California regulation and renewable infrastructure tailwinds, in addition to the technical setup that I see with the bullish crossover.
All right, so we've got that technical setup with the bullish crossover, which Rick will look at in a second. Since that bankruptcy, up about 60%. So, certainly a move to the upside. But walk us through some of these technicals that Jessica's mentioning.
Sure. Starting with a shorter term 1-year picture, we can see that this is one of those charts that kind of has 2 phases. If you were to backtrack a little bit here, you can see we had this significant gap down that gave us some boundaries to watch. You can see our darker red line is about where things topped out again near that $18 level. So 18 to about 1877 is a potential upside zone to watch. In the shorter term, though, we formed a inverse head and shoulders type pattern here. You can see we had our shoulder, head, shoulder, and this was the neckline area here, our green line near about 1430. This, unlike its normal counterpart, this is more of a bullish type of pattern here. So we did get a breakout above that neckline area. Now we have transitioned into more of a rising wedge type shape here with a rather widely spaced trend lines here, both pointing upward, but the top one is more modestly sloping. We are close to potentially breaking out here around that level near 1725 or so. If we were to look at some of our other studies here, we can see that we have crossed above our moving averages here in pretty quick succession. 21, 63, and 252-day exponential moving averages here on our daily chart. We can also see RSI presents us with kind of a conundrum here because on one hand, we are out of that overbought area. We have trended lower here. We are showing a little bit of divergence here in terms of our prices here. Price is on pace for a higher close. RSI is trending downward. However, we're also breaking through our trend line and making a new relative high. So in the shorter term, it actually seems like it's more bullish and we're still following our green trend line here to the upside. Finally, when we look at our volume profile study, we've crossed above some of our heavy volume nodes here. The next one comes in around this 17 level. So look for this to be a potential consolidation zone or a potential breakout area on the road up to 18. A quick glance too at our 5-year chart to show Jessica's visual scan here. That's our moving averages 13 and 26 crossing over each other, signifying more of a long-term bullish shift.
All right, and yeah, this is sort of back at the end of their bankruptcy declaration here in 2020, so you can see some of that upward movement there. Rick, thanks for walking us through those technicals. And Jessica, let's move on to your next trade. Bank of New York Mellon, sort of on the heels of their earnings, some positive notes about consolidation and potential upside involving AI. Why did you pick this one?
Yeah, the AI narrative is certainly a piece of it, but this also goes to the larger secular trend that I'm seeing with market dynamics shifting around, which is tokenization and digital assets. And I do believe that Bank of New York Mellon is going to be a beneficiary of that. Now, this did pop up from yet another scan. This is more on a fundamental basis that's looking for growth in value. So really, Bank of New York Mellon's combination of higher returns, structural growth, and efficiency gains makes it this outperformer for large of cap finance, but I look for high profitability. So ROTCE, we sometimes look at return on equity, but if we're looking more in the financials, ROTCE stands for return on tangible common equity, which is a key profitability metric for banks. So it measures how directly and efficiently a bank generates profit from tangible common equity, excluding intangible assets. So that's at 25.9% year to date. That signals strong returns with low credit risk. There's growth ahead with leveraging tailwinds in treasuries, wealth management, and digital assets as we see that transformation. And I love the valuation. It's trading at under 15 forward earnings. It's expecting in the longer term about 10% earnings per share growth. So from a valuation perspective, the metrics that I pull and that key theme of tokenization and the transformation that I see within the markets, I really like Bank of New York Mellon.
All right, so Bank of New York Mellon, as I'm looking at the charts, pretty flat on the month, but up more than 40% on the year. Rick, what are the technicals showing us for Bank of New York Mellon?
Yeah, so a nice move to the upside in the longer term, but range bound, as you say here. And the boundaries that stick out to me on this chart here, this rough area here, this darker green line like 103 is around where things formed a notable intraday high. They struggled to overtake that level. Then after the breakout, that was roughly where we hit support multiple times here, around 103. If you're looking for exact stop on a dime price activity, you're going to be disappointed a lot of the time. We're trying to just kind of describe general areas of interest and general trends here. Similarly here, 99.50, this was around where we hit lows a few times here. You could extend down to 98 if you really wanted to go to the absolute intraday lows here. But again, just kind of general areas to watch out for. So that would be our supportive zone. To the upside, you can see that we have broken through our blue trend line here that was trending upward for a while. We topped out near 110.87. We hit resistance around 110 a second time here, giving us this shorter term downward sloping trend line now. So that would be one shorter term area to keep an eye on there. Our moving averages that we follow, we have crossed above our yellow 21 day. We found some support at our orange 63 day that roughly coincided with that 103 level. RSI also continuing to trend downward. We are out of that overbought area after only 1 day spent above that threshold of 70. Now bouncing around and struggling to stay above the 50 midline here. That would signify a shift to bearish momentum if we were to cross lower. Our red downward trend line is still in play. When we do incorporate our other studies here, the volume node this time is around 106 to 108. That's around where we're trying to work our way through now. Plus one standard deviation channel comes in near 116. To the downside, we have our support zone with our confluence there. Notice as well the volume node is here near 101. So this seems like the area to hold for the bulls to the downside.
Yeah, and trading right now sort of in that upper volume area right around 108.03 right now for Bank of New York Mellon. Jessica, your last pick here coming off of a big day yesterday, a new all-time high for Alphabet. Why is this one on your list?
Yeah, I still believe in the AI theme. I was pulling and doing my research and understanding the big macro picture. So if we're thinking top down, and we're now in the midst of earnings season, going back to last earnings seasons for the Magnificent Seven, we expected around 13% growth for the Mag 7. That came in at about 26%. So there's still more upward momentum, even that's being priced in. If we just compare to last quarter, the past is not indicative of future results naturally, but I do think from the AI narrative, Alphabet is a huge piece of that. And we need to remember when they're reporting earnings, which is on October 29th, that's also with Meta, which means there's going to be some comparisons on that day. But I think they're really positioned for another solid quarter. We are looking for strong search execution, expanding AI-driven efficiency, more cloud growth as well to reinforce that dual engine that it has of profitability and innovation. But more importantly is elevated expectations that are there for any ad growth. If there is a miss on that, that could weigh on sentiment, but that could be a buying opportunity. We saw an uptick even in the App Store for Gemini. So it's really, for me, the focus is core AI, which is Gemini, and how that leads to them being an advertising leader poised for multiple expansion if that momentum continues. And I do believe that they will be. We saw that with Gemini, but that's what I want to pay attention to. There are some risks, of course, but also that comparison with Meta on the same day. So October 29th is going to be a spooky day.
Yeah, it certainly will be. And you bring up such a good point that the timing of your earnings matters so much, because if you're going up against a fellow behemoth, you are going to be met with the comparisons, and that is going to impact the market action. So a very good point there. But as we look at Alphabet on its own, Rick, what are the technicals standing alone telling us?
Once again, more of a range-bound, shorter-term period here. We can see that the highs came in around this area, 256, 257 or so, double top type of pattern, giving us almost an M-type shape here. But now we have also a low point here, 236 or so is where we hit some lows, sort of around the highs first as well, too. We also have this upward sloping trend line here. You could have said it was more of a rising wedge type shape initially. That has been significantly kind of blown away at this point. We never even really came close to retesting our gap lows here near about 225 or so. So a longer term, if things really fall apart, that could be one area to watch here. But now trading close to our white trend line here that you could have drawn off this series of low points. So moving averages that we can see, we are right on the nose with our yellow 21-day EMA here. So that coincides roughly with that trend line, a break below 246, 244, around that general region there. That would be where we would start to think that the trend perhaps would be interrupted here, and a retest of the support could be the next step. RSI, we have seen it trend downward, a brief dip below the 50 midline here, but we've broken through that downward trend line now. So RSI perhaps maybe looked a little bit better than the price activity until today. Now we are sinking back toward that 50 midline here as a price was rejected at those old highs. So volume profile, we can see our biggest node near current price right about here where we are now. We're on the lower end of that range, centered around 250. Our +1 standard deviation channel just below lines up with our trend line as well, near that 240, 245 general region here. That's kind of the supportive theme. Very little volume as well until you get all the way down here near 195 to 190 here. So that's the next downside heavy importance area.
Yeah, and right now trading right near that key support level you mentioned, 245, 246, trading 246.34 right now, about $10 off of that all-time high we saw yesterday in advance of their earnings on October 29th. Jessica, thank you for being with us today with your picks for Big Three. Jessica Inskip from stockbrokers.com, and Rick Ducat, of course, our lead market technician here on Schwab Network. Thank you for always being with us.